Hey traders, another session where the promised de-risking in terms of what Goldman Sachs has been mentioning and discussing since the middle of the month. Another session comes and goes and we're not seeing that big de-risking. There's still one more day left before the end of the month, and I just want to continue to stick with the plan that we've discussed and put into place since June the 10th. And that is that yes, there will be certain sessions. I think they're going to be harder to identify, more difficult, but there are going to be certain sessions where the market is going to want to sell off, and I simply won't be a participant in it. I will simply, very likely, just like I was once last week, stopped out when the market persisted moving lower, like we saw on the 24th. So today, I go about doing the same exact strategy, one that we've outlined here a number of times, one that I've basically outlined to the members to follow, which is look for the range extremes after the bell rings. Focus on when the markets bottom out, either at the HPMR, the hourly price movement range, the indicator here that shows the resistance and the support based on historical volatility. And you really want it to overlap, ideally, with the V score, the Z score of the volume weighted average price, in this case extending to that -2 reading. I mean, that's the kind of thing that we're waiting for. Now, sometimes it doesn't happen. Sometimes I end up waiting for or capitalizing on some of the alternative or more aggressive type entries, which are going to correspond with a clearing range breach retreat. A breach retreat is not the same as the market going down and testing basically the early morning lows near the V score, in this case, the -2. So two very different things. In fact, if I were looking for the clearing range breach retreat here, where that would be a 30-minute setting on the high-low measurement that I'd be focusing on, it never came. It just never came. The market breached and kept going. One of the things that we're going to talk about this week, one of the tools that I'm going to show you how I use is really a departure from what a lot of folks have seen me do. And I'm stoked to really start showing you a different part of, a different aspect of trading. And that is, what if you have momentum? And what if you do have honest to goodness momentum? What if you have a squeeze? What if you have volume? What if you have an edge on playing a market when it takes out resistance? And that's something that would require slightly different set of skills, not different sets of levels, but different confirmations of what happens at those levels. Now, a lot of you that are watching this video have been following and are members or have attended any one of the classes. And, one of the things that John and I did, back in 2018, I believe it was, is we did a day trading class together. And while I'm the breach retreat and buy exhaustion type trader, John's a momentum trader. And that was a really cool class. And what I want to do is just kind of come back with the other half of that class, which is many of you've seen many, many videos where I've shared how to buy at the lower end of the range, how to wait for the market to tip its hand, and then buy after a retracement. But what about situations like this where we get a clearing range breach and then the market just keeps going? Are there ways to take advantage of that? Are there ways to play the momentum? And again, it would be a different set of tools. So I just want to make sure everyone realizes, again, I'm sticking with the bullish bias that I started with discussing for the members on the 10th. I'm not backing off that anytime soon. One of the things that we did today in the chat room was I shared my overall bias for 2020 and why we are looking at an asset bubble, why I'm as convinced as I am that we're not going to see any near-term significant de-risking as Goldman Sachs has promised, why and what the Federal Reserve is buying and things like that. You can pause this video. You can see a lot of the notes that I shared with members right now if you'd like. The bottom line is this. As long as the Federal Reserve is willing to continue to buy these ETFs, as long as the Federal Reserve is willing to keep this vertical limit on their balance sheet, it's very difficult to not call this an asset bubble and stick with the long side of the trade. Okay, so really what I want to start to do, and today, I'm talking about the value of the V-score again today on the NASDAQ and on the S&P, but what do you do with this? And that's really what we're going to spend a lot of this week talking about, utilizing things like the squeeze, talking about things like momentum and how to confirm momentum via volume. All right. So again, this is a class we did back in 2018, and I'm, one of the most popular questions I get is, Rag, I get that you're taking these trades. I get it. You're taking the advantage of the market heading down to these levels that your V-score monitors. But what about this? How can I take advantage of that? Or how can I take advantage of this and this, because the market might just keep going? How do we know it's not going to be one of those back and forth markets? So it really is, they're complementary styles, as long as you know which to consult at which end of the range. Exhaustion at the bottom end of the range with a bullish bias, momentum at the top of the range when you have a bullish bias. So that's what I want to leave you with here, sort of setting the stage for what we're going to talk about in these free videos and premium videos for the week. Thanks for coming along. I think you're going to get a lot out of this series this week that we're going to dive into. All right. I'll see you in the next update.